Some TV, the pulse of the nation. Some TV, the pulse of the nation. Some TV, the pulse of the nation.
Are you stuck in Jalingo late at night? Need a safe and reliable ride fast? Introducing Supercab, Jalingo's trusted ride-hailing service from anywhere in the city. We will pick you up right at your doorstep. Book a ride in seconds. Safe, fast and affordable. Visit www.supercab.com.ng or download the Supercab app today. Supercab, your ride your way.
Good afternoon and welcome to Business Daily on Some TV, the pulse of the nation. Your trusted source for in-depth analysis, market trend, and key drivers shaping Nigeria's economic landscape. I am Teresa Ayuba, and here are some of the headlines for today. Nigerian debt to GDP ratio drops to 39.4% after GDP rebasing. 11 bank reaches non-performance loan limit after debt reclassification. The Nigerian's All Share Index rose 0.18% on Monday. Now the news info. Nigeria's public debt to GDP ratio has dropped to 39.4% in Q1 2025, following the successful rebasing of the country's gross domestic product (GDP) by National Bureau of Statistics (NBS). The rebasing exercise significantly increased Nigeria's normal economic output and improved its. Let's take a brief commercial break.
Are you stuck in Jalingo late at night? Need a safe and reliable ride fast? Introducing Supercab, Jalingo's trusted ride-hailing service from anywhere in the city. We will pick you up right at your doorstep. Book a ride in seconds. Safe, fast and affordable. Visit www.supercab.com.ng or download the Supercab app today. Supercab, your ride your way.
Alright, welcome back. I'm still Teresa Ayuba, and here are some of the headlines for today. Nigerian debt to GDP ratio dropped to 39.4% after GDP rebasing. 11 banks branch non-performing loan limit after debate reclassification. The Nigerian All Share Index rose 0.18% on Monday. Now the news info. Nigerian public debt to GDP ratio has dropped to 39.4% in Q1 2025, following the successful rebasing of the country's gross domestic product (GDP) by National Bureau of Statistics (NBS). The rebasing exercise significantly increased Nigeria's normal economic output and improved its debt sustainability profile. As of March 31st, 2025, Nigerian total public debt stood at 149.39 trillion naira, comprising 78.76 trillion naira in domestic debt and 70.63 trillion naira in external debt. The debt to GDP ratio of 39.4% is slightly below the self-imposed limit of 40% debt to GDP set by the government and the 55% threshold set by the World Bank and International Monetary Fund. At least 11 commercial banks in Nigeria have breached the regulatory limit for non-performing loans in April 2025. According to Mustafa Akinkunmi, a member of the Central Bank of Nigeria's Monetary Policy Committee, the NPL ratio climbed to 5.62%, crossing the CBN's prudential branch mark of 5%. The branch mark was largely driven by loan reclassification following annual risk assessments conducted across the banking industry. Despite the NPL branch, Akinkunmi stressed that Nigeria's banking system remained fundamentally strong, with significant improvements in key financial ratios, especially capital adequacy. The industry-wide capital adequacy ratio rose from 10.81% in April 2024 to 15.55% in April 2025. The real estate sector has emerged as Nigeria's third largest economic sector, following the largest GDP rebasing by National Bureau of Statistics. The sector contribution to GDP surged from 10.5 trillion naira in 2023 to 30.7 trillion naira after rebasing the further claim to 41.3 trillion naira in 2024. Trade has overtaken crop production to become Nigeria's largest economic sector, with a rebased contribution of 68 trillion naira in 2024. Crop production followed closely with 61.9 trillion naira in 2024. The rebasing exercise reflects changes in price structure, sectoral classification, and broader inclusion of emerging segments of the economy, providing a clearer picture of Nigeria's economy. The Nigerian Oil Share Index rose 0.18% on Monday, July 21, closing at 131,826.77 million naira despite a slightly dip in market volume. The market pushed higher with total market capitalization edging up to 83.3 trillion naira. NCR, Cortex, and Intergenes all hit maximum daily gain of 10%. Access Crop led by volume charts with 61.7 million shares traded, followed by Cohel PLC with 43.9 million shares. The market bullish momentum continues with the All Share Index family above the 131,000 mark. If investor sentiment stays positive, the index may change the 135,000 level in the near term. Domestic airlines in Nigeria refunded a total of 1.038 billion naira to 528 passengers between April and June 2025, according to the Nigerian Civil Aviation Authorities. The authority highlighted the aggregate refund activities during the second quarter of the year. The NCAA emphasized that flight cancellation may entitle passengers to refund or compensation, governed by specific conditions outlined in Nigerian Civil Aviation Regulation. Passengers are required to submit a formal complaint to the airline and escalate the case to the NCAA if not resolved satisfactorily. The 52nd annual meeting of the African Export-Import Bank, Afrexim Bank, concluded with a string of high-impact deal signing expected to unlock over $1 billion in strategic investment across Africa. The event drew over 8,000 participants, including head of state, government ministers, and private sector leaders from Africa, the Caribbean, and beyond. The meeting saw four major project preparation facilities agreements signed with entities from Malawi, Kenya, Zimbabwe, and Nigeria. This agreement aimed to catalyze development in healthcare, infrastructure, clean energy, and industrialization. Notable deals include $300 million investment pipeline in Malawi and $40 million investment in pharmaceutical manufacturing in Kenya, a $350 million floating solar mega project in Zimbabwe, and a $300 million power plant project in Nigeria. Nigeria and Egypt has reaffirmed their commitment to strengthening diplomatic and economic ties as both nations work toward achieving the developing D8 goal of $500 billion in intra-bloc trade by 2030. The Minister of Foreign Affairs, Ambassador Yusuf Toga, emphasized the historic relationship between both countries, which date back 1961 and is rooted in African solidarity and shared development goals. Toga called for renewed efforts to rebalance the trade relationship and urged both nations to work collaboratively to meet the D8 target. He emphasized the need for collaboration in key sectors such as solid minerals, agriculture, renewable energy, ICT, aviation, pharmaceutical, garment, leather, and tourism. Egypt Minister of Foreign Affairs Dr. Bad Al-Daleti noted trade between both countries grew from $187 million in 2023 to $315 million in 2024, but still falls short of the potential offered by both economies. The Nigerian mutual fund industry has recorded significant growth in the first half of 2025, with a net inflow of 1.99 trillion naira within 6 months. According to the data released by the Securities and Exchange Commission, the industry total net asset value surged from 3.98 trillion naira as of December 2024 to 5.98 trillion naira by the end of June 2025, representing a remarkable 50% growth. Money market fund dominated the growth, with NAV expanding from 1.68 trillion naira to 3.14 trillion naira, driven by investors' preference for short-term, low-risky instruments and attractive yields. Dollar-dominated fund grew modestly from 1.71 trillion naira to 1.92 trillion, benefiting from persistent FX volatility and demand for currency hedging. Real estate investment trust saw exponential growth, with NAV rising from 99.95 billion naira to 350.38 billion naira, reflecting increased investor appetite for real estate as a hedge against inflation. Equity-based fund, balanced fund, and fixed economic fund also recorded health growth, with specialized funds like clean energy and gender-focused fund showing encouraging growth, rising from 3.7 billion naira to 17.63 billion naira. Nigeria's total public debt is projected to rise to 160.6 trillion naira by the end of 2025, driven by increased borrowing to bridge the widening fiscal gap. A report by CSL Stockbroker Limited forecasts the federal government will borrow around 9.3 trillion naira or more in the second half of the year, pushing the country's public debt stock to approximately 50.2% of the pre-reverse gross domestic product. The report highlights growing concern and Nigerian fiscal trajectory, citing weak oil revenue and delays in implementing key tax reform, Oil production underperformance and lower than expected oil price have created a significant gap in projected earnings, while a proposed increase in value-added tax rate from 7.5% to 10% has stalled. The Nigerian National Petroleum Company Limited revenue maintenance practice have also raised concern, with the company maintaining only about half of the savings from fuel subsidy removal to the federal account. Verge is reshaping the payment landscape across Africa with the Contactless payment technology. The brand has disbursed over 85 million cards, with more than 35 million being contactless. Going forward, all Verge cards issued will be contactless, making a transaction to top pay technology. Verge contactless technology enables swift and reliable transaction with enhanced security features such the PIN Authentic. The brand has worked closely with bank, fintech, and merchants to expand acceptance points and enable thousands of terminals across Nigeria to support countless payments. This has resulted in shorter queues, faster turnover, and enhanced operational efficiency for merchants. For consumers, it's pay experience that a quick, smooth, and seamlessly integrated into daily routines. Verge also on campaign emphasized the brand commitment to delivering fast, secure, and dependable payment solution with a youthful, mobile-first population demanding smart payment option. Verge remained positioned at the forefront of Africa's digital payment landscape. The brand evaluation in the countless space represents a technological advancement that delivers real-world impact and redefines what's possible in African payment. Nigerian gas production has increased slightly to 7.581 billion standard cubic feet per day in June 2025, up from 7.352 billion in May, according to the Nigerian National Petroleum Company Limited. Gas sales also rose from 4.698 billion mm in May to 4.752 billion mm in June. However, crude oil and condensate sales decreased to 21.68 million barrels in June from 24.77 million barrels in May. The NNPCL has completed the AKK River Niger crossing, which significantly de-risked the completion of the mainline. The company is also working on the CB3 River Niger crossing and reviewing the PHRC, WRPC, and KRPC. In addition, the NNPCL generated a total revenue of 4.571 trillion naira in June 2025 and made 905 billion naira in profit after tax. The company has also reached 870.38 NYC Corp members through the financial literacy program. Some TV special report. Nigerian stock experienced history bull run under Tinubu. The Nigerian stock market has recorded its most impressive run under any civilian administration since 1999, with the all-share index gaining 136% since President Bola Ahmed Tinubu assumed office in May 2023. The ASI has surged from 53,769,028 points to over 131 points, a historic milestone for Nigerian capital market. The market performance has been driven by President Tinubu's economic reform agenda, including fuel subsidy removal and foreign exchange unification, which have earned praise from global institutions and investment community. Other factors contributing to the rally include the Central Bank of Nigeria receptualization drive, which has boosted the valuation of lease bank and attract fresh capital into market. Increased liquidity with FAAC allocation increased significantly from the removal of subsidies. High interest rates with the monetary policy rate currently at 27.5%, spurring investment in equities and fixed economic access. An uptick in corporate profitability with many listed companies reporting revenue growth despite inflationary pressure and weakened consuming purchasing power. Local investment in driver's seat. Local investments have driven much of the recent rally, with the domestic participation in equity trading amounting to the banking sector, for example, has added over 7 trillion naira in market capitalization between 2023 and 2025, driven largely by strong gains from GTCO, 2 trillion naira, and Zenith Bank, 1.7 trillion. What's next? With Nigerian equities already up to 27.87% year to date as of mid-July 2025, analysts expect the market could close the month with double-digit gains. If this rally holds through the rest of the year, President Tinubu could go down as most consequently Nigerian president for stock market performance. However, for most Nigerians, the stock market stellar return remain disconnected from their daily realities. That's all for today on Business Daily. Stay informed, stay ahead, and remember, in business, timing is everything. I am Teresa Ayuba. See you tomorrow on Some TV.
Are you stuck in Jalingo late at night? Need a safe and reliable ride fast? Introducing Supercab, Jalingo's trusted ride-hailing service from anywhere in the city. We will pick you up right at your doorstep. Book a ride in seconds. Safe, fast and affordable. Visit www.supercab.com.ng or download the Supercab